Welcome to today's finance series. I am Oyekemi Ajayi, and today I will be talking about preparing to obtain a facility with a focus on the documents required. Follow me as we go into this round of presentation. Loans can be obtained from a bank or other financial institutions. We can also get it from DFI or a private investor. One key thing that we must all note is that for a business to access a facility, the business must first evaluate itself. You must first ascertain your fitness as a business to ascertain a facility and if you are ready for it. So what I'm saying in essence is you need to check your readiness, and you can do this by looking inwardly, looking at your historical numbers, and then checking to see how you have performed, and also looking at the forecast of the business, more like the future of the business. In the next 3 years, in the next 5 years, what are the projected cash flows of this business? How do you intend to grow? How do you see yourself? And do you have the ability to repay the facility that you are looking to take as at now? What are the debt covenants that you should look at in a business? So for example, your DSCR ratio, your debt service coverage ratio, you need to be able to be sure that your EBITDA, your cash flows can cover conveniently your repayments. What are the things that you would repay in a business? You would repay your interest and your principal. So the finance person must always do this check regularly, before determining, okay, I can go take a business. What is the limit that this business can accommodate? Now, when you have been able to ascertain all that, you can approach the bank or DFI, as the case may be, to obtain the loan. When you are in the process of doing that, there are certain documents that would be required before you obtain the loan. The very first is the application form. The next is your KYC documents, because your lender has to know you. So things like memorandum and articles of association, the certificates of incorporation, the details of the director. So your CAC forms, like your CAC form 2 and your CAC form 7, would be required in this instance. Another document that would be required is a feasibility study, especially if you are going into a new line of business. We would also be looking at the audited financial statements for at least 3 to 5 years. We'll be looking at the company profile, because they need to get information about the company. Who are the people behind the company, the promoter of the business, the board of directors, the management team, what's the corporate governance like of the business. Another key thing that a lender would want to know is, are things, a decision making hovering around a single person within the business, who would most likely be the owner of the business. Another key document that you need to put together is a business plan. This is expected to give detailed information about the project that you want to go into. It would also give us information about the type of products, the type of services, the market analysis that you have done, the sales plan, how you intend to, take this product into the market and launch. What are the operational plans that you have put in place for this product? What is even the management team looking like? And also the financial projection of the business, and also the products that you are looking to introduce into the market. These are the basic documents that a lender would like to see in a business before issuing a loan or granting a facility. Remember, every business is specific, and every lender's requirement is also specific. So whatever your lender requires is what you would provide. But this information that we've provided are basic items that a lender would look out for. Thank you so much for your time. Thank you for listening. I hope you have gained 1 or 2 things. Do have a great one.